Silver just exploded past $91, 4.4% in a single day. Silver ripped $3.84 higher in one session. And the candle on the chart looks very strong. I need to tell you what's behind this move because the data I found today changed the way I am thinking about where silver goes next. What I'm about to show you is why $92, the last resistance level before $100, is about to break. And when it does, the next stop is $100, not Shanghai, where it is already above 100. I'm talking about the international spot price. The price you see when you type silver into Google, that price is going to 100. I'm going to show you the exact data that makes me believe that. But before I get into the numbers, if you're new here, welcome. This is The Hidden Economy. I cover silver and gold with real data, real numbers, no hype, no clickbait, just the raw information you need to make your own decisions. If that sounds like something you need right now, hit subscribe, smash the like button, and hit the hype button underneath this video. That button directly supports this channel and helps me keep putting out videos every single day. Because this week in silver is one for the history books, and I'm not missing a single day of it. So let's get into it. Silver spot price right now is $91. That's 4.4% in a single day. This week alone, silver is up 7.7%. And since last Tuesday, February 17th, silver has pumped 23.8%. If you bought silver last Tuesday, you're already sitting on a 24% gain. I called this move in the members-only video of my channel last week, and it's happening live. Here's a stat that really stood out to me. Silver's 50-day moving average is at $83.52, and that moving average has not declined since May 30th of last year. 9 months. 9 straight months of the 50-day moving average, going up without a single downtick. I've gone back through silver's history, and this kind of sustained trend strength is extremely rare. It tells you that every single dip in silver for the last 9 months has been bought. Every pullback was temporary. Every shakeout failed. The trend is not just intact, it's accelerating. I believe silver reaches and breaks through 92 this week. I believe the next stop after that is 100. Let me start with the COMEX numbers because this is where my stomach drops every time I look at updated data. Registered silver in the COMEX vaults has dropped to 87.2 million ounces. As you know, silver has been in a supply deficit for 4 straight years. The world uses more than it mines. But when you see the vault numbers dropping this fast, the deficit stops being a theory. It becomes something you can watch in real time. If you're new to COMEX, here's what I need you to know. COMEX is where the big banks trade silver futures. A futures contract is a promise to deliver silver. The silver in the vaults backs those promises. Vaults are the reserves. Contracts are the checks. When I see the reserves dropping, but the checks keep getting written, that's when I start paying very close attention because you can't deliver silver you don't have. 2 weeks ago, on February 9th, registered silver was 102.3 million ounces. Today, it's 87.2. 15 million ounces gone in 14 days. That's more than 1 million ounces a day draining out of the system. And the thing that really got under my skin when I was building out the data tonight is this. There is a complete absence of new metal coming in. Nobody's adding silver to the COMEX vaults. Silver is only leaving, not entering. The door only swings one direction, out. Those 15 million ounces hit me hard when I put them in perspective. The entire annual global silver mine supply is around 830 million ounces. 15 million ounces in 2 weeks is almost 2% of annual global mine supply, just walking out of one vault system in 14 days. It's not going to waste. Someone is taking that silver. Someone wants it badly enough to take physical delivery instead of just settling for cash. When I see banks pulling real metal out instead of trading paper, my first thought is always the same. They know something we don't. Which brings me to Wells Fargo. And this is the part that made me stop scrolling and sit up straight. On Tuesday, 229 COMEX silver delivery notices were issued. Now, if you're new here, that means 229 futures contracts are going to be settled with physical silver. Not cash, not paper. Real silver bars physically moving from one vault to another. And out of those 229 notices, I couldn't believe this when I read it, Wells Fargo issued 228 of them. Read that again. 228 out of 229. Let that number sit for a second. 228 out of 229, one bank, one single bank, issued 99.6% of all delivery notices in a single day. That's over 1 million ounces of physical silver that Wells Fargo is delivering. One institution, one day. I've been tracking COMEX data for a long time, and I've never seen a single bank dominate a delivery day like this. Think about what that means. This is not retail investors buying coins. This is Wells Fargo, one of the biggest banks in America, moving 1 million ounces of physical silver in one go. At this scale, between institutions this large, you have to ask yourself one question. What do they know now? Who was on the receiving end? Who wanted that silver badly enough to stand for delivery instead of rolling their contract? Look at these names. BNP Paribas stopped 155 contracts. That's the largest French bank saying, give me the metal. HSBC stopped 34. JP Morgan stopped 21. Goldman Sachs stopped 2. Mer stopped 8. The biggest names in global banking, all of them saying the same thing. I don't want your paper. I don't want your promise. Give me the physical silver. Total February delivery notices have now hit 4,160 contracts. That translates to 24.8 million ounces delivered in February alone. 25 million ounces of silver physically delivered through COMEX in 1 month. I want that to register because every ounce delivered is an ounce that's spoken for. It's an ounce that can't back another futures contract. It's an ounce that's gone from the available pool. And with registered silver already at 87 million and falling, every delivery tightens the noose. Now, here's where the timing makes this explosive. We are 2 days away from first notice day for March. March is a major delivery month on COMEX, much larger than February. On first notice day, everyone holding a March futures contract has to make a decision. Do I roll this contract to May and kick the can down the road, or do I stand for delivery and take the physical silver? March open interest has been rolling down hard. 71 million ounces rolled in just one session recently. I'll give the bears credit here. The force major crowd, the people saying COMEX can't deliver in March. That's probably not happening this month. I was watching for it. It's not there. But here's what I need you to focus on. Even with all that rolling, registered silver still dropped from 102 to 87. The vaults kept draining anyway. The people who are standing for delivery are taking real metal. If March sees even a fraction of January's delivery demand when 33 million ounces walked out in a single week, registered silver could drop below 60 million ounces by mid-March. 60 million. I want you to sit with that number for a second. At that level, the paper promises and the physical backing don't add up anymore. Traders who see that coming don't wait. They front or run it. They buy now. That buying pressure is part of what breaks 92. Here's the thing that keeps me up at night when I think about March. The people rolling contracts right now are choosing not to take delivery this month. But they're not exiting the trade. They're rolling into May. That means the demand doesn't disappear. It stacks. It accumulates in the next delivery month. And when May comes around, we have the same conversation again, but with even less silver in the vaults. This is a pressure cooker. Every month the heat goes up. Every month the metal goes down. Something has to give. And I believe what gives is the price. It goes higher, much higher. Now, let me bring Shanghai into this because every time I pull up this chart, I have to double check I'm reading it right. Shanghai silver closed today at 1/426 per ounce, up 4.57%. Shanghai Gold Exchange at $100.40, both above 100, both higher than my last video 2 days ago. The premium over international spot is now over $13 an ounce, and it's not shrinking, it's growing. In a normal market, that gap gets arbitraged away. Someone buys at 91, ships to Shanghai, sells at 104, easy money. The fact that nobody is closing this gap tells you either the silver is not available to ship or there are barriers preventing it. I've never seen a premium this persistent in my time covering this market. Gaps like this close by the lower price, rising to meet the higher price, not the other way around. Here's the other thing. Shanghai inventory actually went up 5.95 tons today, and the price still went up 4.5%. Think about that. New supply arrived and the price went up anyway. The market ate that supply and said, give me more. 11.4 million ounces total in Shanghai. 1 day of Wells Fargo deliveries is nearly 10% of everything Shanghai has. The physical market is tight, really tight. Now, I want to zoom out and show you something that made me realize this is bigger than just silver. Most channels aren't talking about this today. It's not just silver that's moving, everything is moving. That's the physical market bleeding metal. Wells Fargo delivered over 1 million ounces in 1 day with the biggest banks in the world on the receiving end. That's institutional conviction. Shanghai is trading at $104. That alone tells me the physical market value silver above 100 right now. No new metal is entering COMEX. The door only opens outward. First notice day for March is in 2 days, and March is a major delivery month. Palladium, platinum, and silver are all surging together. That's industrial demand, not speculation. And Iran adds a geopolitical premium on top of all of it. Every single data point is pointing the same direction up. I cannot find a data point that's bearish. I've looked. I spent 2 hours tonight going through every number trying to find the bear case, and I couldn't build one. The structural deficit continues. The vaults are draining. The premium is widening. The banks want physical. The industrial metals are leading. Everything lines up. I want to share something personal here because I think it matters. When silver hit 121 in January and then crashed to 77, I got messages from people panicking. People who bought at 110 asking me if they made a terrible mistake. I told them to zoom out. I told them the physical shortage didn't disappear just because the price dropped. I told them that crash was caused by margin hikes and paper selling, not by silver suddenly becoming abundant. And here we are, 5 weeks later, silver back at 91 and climbing. Every single person who held through that crash is now watching their position recover. And the people who panic, sold at 80, are kicking themselves. I'm sharing that because 92 is going to create the same fear. Silver will hit 92, it might get rejected one more time. People will flood the comments saying, "See, I told you it was done. The rally's over. 92 is the top." And I'm going to be right here telling you to look at the data, not the emotion, not the fear, the data. Registered silver falling, Shanghai above 100, Wells Fargo delivering 1 million ounces, no new metal entering the vaults. The data doesn't know about 92 resistance. The data knows there isn't enough silver, period. That's the difference between technical analysis and fundamental analysis. The chart says 92 is resistance. The fundamentals say there's a physical shortage getting worse every single day. And when the fundamentals are this strong, the technicals eventually surrender. 92 will hold until it can't, and then it won't exist anymore. And what's on the other side is 100. Let me also talk about what 100 spot price means, because I don't think people have fully processed it. At $100, silver becomes a mainstream media story. Again, not just financial media, mainstream. CNN runs a headline. BBC picks it up. Your coworker mentions it at lunch. Your uncle texts you asking if he should buy silver. And that is when the real move begins, because the majority of retail money hasn't touched silver yet. The KOT reports show specs are barely positioned. When $100 makes the news and retail piles in, that creates a demand wave that the current supply simply cannot absorb. And that's when things get really interesting. Here are the risks. Because I always give you the risks, and I think it's irresponsible not to. Risk number 1, margin hikes. When silver moves this fast, COMEX can raise margin requirements. That forces traders using margin to sell because they can't afford the higher collateral. We saw this in January when silver pulled back from 121 to 77. That was brutal. A margin hike right now could cause a 10 to 15% pullback. Maybe silver drops from 91 to 78 or 80. It would feel terrible, but every single pullback in this rally has been bought aggressively. The crash from 121 to 77 lasted less than a month before silver was back above 88. In a physical shortage, pullbacks don't last. The shortage is permanent. It takes years to bring new mines online. The pullbacks are temporary. The trend is not risk number 2. Iran talks succeed and geopolitical premium evaporates. Possible. But, like I said, silver's move today is not about Iran. It was rallying before those headlines. Iran is a bonus, not the engine. Risk number 3. I'm wrong. 92 holds. Silver pulls back to 85. It happens. Markets don't move in straight lines. If it happens, I'll tell you honestly. I'll adjust my view and I'll show you the updated data. I don't marry my predictions. I follow the data. But right now, tonight, staring at every number I can find, I cannot build a bear case. The data is unanimous. There's someone I follow who built the COMEX tracking system I use for these videos, someone I respect deeply. And he wrote something today that has been rattling around in my brain all night. He said he expects silver above $120 later this year. His reasoning is simple. Silver demand is larger than supply. You can track that by watching the vault strain. And the next signal he's watching for is when the futures market flips. When traders start paying more for silver today than silver tomorrow. Right now, it's the opposite, but the gap is closing. And when it flips, that's when the price stops walking and starts sprinting. He expects that after vaults drain further, retail investors realize the January spike to 121 wasn't a one-off. They pile into ETFs. ETFs have to buy physical silver to back those shares. That removes even more metal. And then mining stocks go vertical. I've been watching his framework play out for 2 months. Registered silver falling, check. Deliveries increasing, check. Premium widening, check. Everything he predicted is happening step by step. And the next step in his sequence is that futures flip. When it happens, I'll be covering it immediately. Silver is at 91. 92 is the last wall standing. And on the other side of 92 is a sprint to 100. Now, the question everyone wants to ask, does silver break 121 and set a new all-time high? I'm not going to sit here and tell you. I know the answer to that. Nobody knows. What I can tell you is what the data says. And the data says the deficit is getting worse, the vaults are draining, the banks are taking physical. China is paying 104. No new supply is coming online for years. If all of that continues on the same trajectory and I see zero reason for it to stop, then here's my prediction.